Public comment. All right, our first item is the FY25 budget review with our clerk's departments and our clerk, Jennifer Locke.
Thank you guys very much. Well, we're here today to present the clerk's budget and our different departments. And I know you guys received that sheet with the elected officials' overall personnel requests, and I think the B budget too. So before we go over each department, I do want to emphasize that it looks like we're having about a $22,000 reduction of our A personnel request, I should say, and then our B budget's a reduction of about $50,864. So we'll start off with the budgets that are flat, and if you have any questions on that, we can go into that. But our first one is our clerk admin budget, which is our travel budget. That's flat again this year overall from fiscal year 24.
Do we have something to follow along with?
Not for that, because I didn't print anything that was flat. I think Brandy had sent you guys the spreadsheets last night overall.
The big.
Assessor
I'm going to put my
budget.
computer here so you can look at the spreadsheet.
No, I can just pull it up. I mean, it's not that hard. I just didn't know we were
Oh.
gonna.
I just
If it's
emailed you
flat.
guys a new copy a few minutes ago.
Oh, well,
So it
that,
should be near the top of your inbox.
Yeah.
okay. Go ahead.
And then the auditor's budget for the B budget's also flat too. And if you have any questions, Brandy and I can cover that too. If you guys want to take a look at that, I can move on to county assistance or let you guys look at that for a second for those two budgets.
If they're flat, I'm fine to move on.
Okay. And then county assistance, we did move county assistance from the Indigent Fund 40. Now it's going to be in our Fund 10. And that is still very much self-supported. And I do just want to cover all. I have that first sheet for you guys to look at. Last year in fiscal year 24, when we adopted our budget, we had 2 positions. We're now down to 1 position. So we have an overall reduction of our A budget of about $66,929 for county assistance. And then for the B budget, we're going up a little bit on the burial and cremations because we're seeing an uptick of applications and approvals on that. But overall, our B budget pretty much remained flat with a reduction of $756. And then the next page for county assistance, I just like to cover the revenue with that. So in 2024, we adopted revenue anticipation about $200,000. For 2025, we're going to look at $180,000. We're seeing not a decrease of payments, but when people fall after 5 years that they haven't made a payment, we can't collect on that. And really our big payouts are typically if we have a lien or something's closing out, the money is returned back to the county at that point. But our monthly payments are slowly decreasing, and the big payouts are typically, like I said, when there's a closeout of a lien. And then for the, that was the medical side of that. For the indigent or police holds, we had anticipated $50,000 for 2024, but we're not seeing that income come in at this point. Those are, if they don't pay after 4 years, we can't send notices or try to collect on those anymore. And so we scaled down our anticipation of 2025 revenues to $20,000. But overall, the 2 revenues for county assistance are still bringing in, we anticipate for 2025, $200,000, which still covers above and beyond with some revenue left over their operations. You guys have any questions on that?
No, thank you.
Okay. And then moving on to a recorder's budget here. So I think I want to take you to the revenue page first, and I'm going to have Melinda and Kim come up too, but I just want to show you the truants happening just in recording right now. I showed you this last year, but it's still declining, the revenues that we have for our HB 521 recording fee, $7 doc, and then our recording fees. So we have adjusted those down again this year. So we're anticipating for 2025, that should say 2025 on there, 185,000 and then 450,000 for the recording fee, of a total of those 2 line items of 788,000. But you can look and see the trend there, what we had in 2020 and 2021 and 2022. The market has definitely slowed down. And so with that, we typically had a position that's 50% funded because we typically have a position that's open 100 days or more. And we're going to freeze that position next year. So we're going to take that off for 1 year until we see an increase of these recordings, particularly the titles on there. So that should be a savings for our overall A budget of about $65,000, $781,000. That's 100% loaded of that position. And then we are asking, our B budget would have remained flat, but we are asking for 1 new program. It's an online beverage license application, and that is $31,185. And that'll allow people with a liquor license to improve efficiencies in the office. This program will save on manual labor costs such as paper, ink, and postage. It will also save on minimizing errors and time, and the program will also save hopefully on parking space too. So the recorder's office is requesting that new program with, I think it's Harris, correct?
Yeah, that's our recording software.
You guys have any questions on that?
Nope.
Okay. All right, you guys are done. That's good. All right, we're moving on to district court, which is our biggest department. We have about 75 employees there. And Acacia and Callie are doing an incredible job over there, and we thank them for all the work that they do over there because it is a lot. So we're looking at the liquor apportionment. We're going to do an increase. We're seeing those revenues still tick up for us. So last year we budgeted $446,000 for our portion and $400. This year we're going to budget for revenue $477,400. So that's an increase of about $31,000 of revenue in that line item. And then we are seeing a decrease in collection community service setup fees and payment plans. So that will be a decrease of $7,000 in revenue on that line items. And then in our overtime budget, we're reducing it from $100,000 in fiscal year '24 to $75,000 for fiscal year '25. And then our B budget is slightly up is because we are asking for some repairs to be done with buildings and grounds to make our space more efficient. And that is, last year we asked for $1,000 in that line item, and it's going to $8,000 for this year. So our overall B budget, because of that, is up $4,869. And then we're asking for 2 position conversions, and I'll let Callie and Acacia explain those details.
Good afternoon, Commissioners. We are asking for 2 clerk conversions this year. One of them being a supervisor position that will be converted to a training and development manager. We kind of took a deep dive this year and just looked at our department as a whole. We looked at our resources, where we could improve, where we could maybe not ask for a new position, but use the clerks in a way that they could maybe take on additional or do roles. And so this compliance conversion is one of those. We would like this person to assist the various departments and just monitor and help us be more efficient in following Supreme Court procedures, being more unified in our daily duties, and just making sure that we're in compliance with the Supreme Court rules. And so we did meet with HR. We did propose a new job description that was graded, which is reflected there on the worksheet. Did you guys have any questions about that one?
I do.
Okay.
So you're really trying to pick up for some additional duties that instead of filling for a full-time staff, you want to use existing staff for.
Correct.
And is it driven by volume or just the lack of being able to fill the position? So, and my question, let me tell you where the question is going, is at some point, if you fill the, you get more and more workload, you'll have to fill the position. So how would that affect the people if you've adjusted them up to take on 2 roles and then eventually you give a full-time person?
Sure. We actually took a look at that department as a whole, and when we had developed this new department and program, we just did not see the numbers that we thought that they were going to be. And so we looked at duties, roles, the different positions within that department, and we feel confident at this point that 4 positions can fully support that department. And later down the road, if we need to adjust things, we will certainly come before the board and ask. But at this time, we think that it's appropriate that this position be converted, so that way we're using our resources a little more efficiently instead of asking for a brand new manager position.
Sure. And that's for the foreseeable future at this point?
Yes.
Yes.
Okay. All right.
And I will say that that position is also going to be a backup to Acacia and myself. So for payroll, that's a big one for us, and that would just be an additional help for us as well.
I like to state this is a position that exists in Canyon County, and what I like to see is just consistency throughout the departments, having proper and updated training manuals, and that we're doing audits monthly. And this person is a perfect fit for that position with their background in education. So I think it's going to make our district court more efficient in making sure that we're all on the same page and doing the same processes.
Okay. Thank you.
And then, was there any other questions on that one? Okay. So moving to the next conversion, this is one of our clerk 2 positions. We are asking that it be converted to a clerk 3 position. And again, this is another ask where we took a deep dive into district court as a whole. We did have some extra duties in our criminal department. Instead of coming before you and asking for a brand new clerk 2 position, we would like to convert an existing clerk 2 to a clerk 3 to assume those additional duties. The person that is in this position has actually already gone through the training and has been fully trained in that department to be able to take those additional duties. We do have 2 other clerk 2 positions in our judicial department that are clerk 3 as well, so we felt that this would be appropriate to make it consistent across the board. Is there any questions on that one?
Nope.
Okay, and again, just as Jennifer had mentioned, we are decreasing our overtime ask by $25,000. We also took a hard look at our numbers, what was trending for our overtime, and we specifically looked at our in-court clerks because that's about where 75% of that overtime comes from. And we've adjusted our court schedules, and we've just been more efficient in each department, getting that additional extra coverage and kind of putting some pieces where we could, be filling those gaps more efficiently. And so in our projections, that is why we came up with the decrease of $25,000.
Which more than covers the conversions.
Yes. So overall, yes, it looks like we're going up a little bit in our B budget, but overall, we are flat or coming in below in our personnel asks.
No, bearer of good news. Thank you.
All right, and then our last one is our favorite, our elections budget. And so we'll start off with the revenues, our elections fees that we get from the state. We, in 2024, had anticipated, or had budgeted $377,000. We're anticipating for fiscal year 25, $395,000 for an increase of about $18,000 in revenue for next year. And then overall, our B budget is decreasing by $18,732. Hopefully in fiscal year 26 we'll go down even further, but with the November election coming up, we have to be prepared to probably print 80 to 90% election day ballots for each precinct, and we're likely going to have a 2-page ballot, which we typically don't have, but every 4 years. So that's going to drive our costs for election supplies and printing, and then just making sure we have enough ballots for election day. That'll be our highest turnout. And then we did increase some of our travel. I'm going to have my staff, likely a few of us, go down to Ada and Canyon and look at their processes again and their equipment, because they run a really good operation down there. And when we went down there 4 years ago, I did learn a lot when he came back to do the November 2020 election. So I appreciate their knowledge and just their processes down there that we've picked up over the years. The other thing we're increasing, but not increasing, because we're going down from 3 elections from this year to 2 elections for the foreseeable future, and unless legislative changes happen, is that the temporary personnel services. We're trying to pull our poll workers from $150 to $170 for the day. They work a 14-hour day. I don't know if we've ever increased that for, at least since I've been here.
We haven't increased that in the time that I've been here
Yes.
either. Yeah.
So
And
we're
that
asking
includes
for that
their
increase.
training as well.
That includes training too. So we typically pay them for training and election day, the 14 hours that they serve on election day, and about a 2.5-hour training, $150 for their services. So we're asking to pay them more for those elections, and hopefully retain and attract more poll workers too.
And with that, it does also give a slight bump to our poll workers that act as judges and dual judges of their precincts to help keep them ahead of the regular poll workers a little bit. It's a $10 bump to the judges and a $25 bump to the dual judges that are over 2 precincts.
You guys have any questions?
Question back to travel. Is it for this November's election? 'Cause
I don't know if
it'll
we'll
be
go down this year. I anticipate likely it's going to be next year
Okay.
on there. If we do decide before the fiscal year or till we publish the budget to go down this summer, I'll cut that out of here. But I think likely it's going to be next year that we go down.
Okay, so that just was
And
my
then we have our
concern. It's like-
conference too that we do in January. We bring all the election staff down for elections training.
Okay.
And the
But I'll
dri-
cut that if we figure we can kill it this
Well,
summer.
I'm not worried about cutting it as much as I am, you can't go down October 1st to make changes for the November.
No, it'd be the next summer.
Yeah,
That's
so
what
that just
Yeah.
was my concern.
And the driver for the reduction in your B budget is largely because of the elimination of the August.
Yes, the August election, and it would be if we didn't have the presidential election this year and not having a two-page ballot and the amount of ballots we have to print, it would be even lower. So I anticipate that budget being lower in fiscal year '26, unless they bring back another election date.
Okay.
And if I can add one thing, about the revenue increasing. Not only are we seeing that this year's revenue from the state is gonna come in a little bit higher than that 377 that we budgeted, we're on track to actually get, I believe it's about 386 or 389 this year. But our revenue that we get from the state, even though it comes out of the sales tax distribution, it's tied to the consumer price index. So the pool that all the counties get a $50,000 base amount, and then everything else is based on population and this pool that keeps going up based on the CPUI. And so as long as inflation's going up and as long as our population isn't dropping as a percentage of the state as a whole, we will continue to see our revenues increase. Now, of course, the state only covers about 40% of what it costs for personnel and operating expenses, but at least it's starting to make up a little bit bigger chunk, or at least keeping pace more so than falling behind.
Okay.
That's pretty much it, unless you guys have any questions.
Nope, I always love the color and the charts and the graphs and all that stuff, so. Anything further?
No questions. Thank you very much.
Okay. And so we've got item 2, which is our FY23 external audit review with our finance director, Brandy Falcon, and it looks like her deputy Keith Taylor.
Yes, thank you. I'm gonna have Keith pass out a document to you guys. We also have Jody Doherty, the partner from Ide Bailey. She's a partner on our audit. So I believe you guys should all hopefully have your handy audited financials in front of you if you wish to follow along. So Jody, I'm gonna have you start us out going through the different audit letters that are in the ACFR.
Sounds good. Thanks, Brandy.
Yep.
So I would like to point out that the financial statements that you see before you are prepared 100% by the county staff. And the only pieces in here that Ide Bailey owns are the 3 letters that I'm going to go over with you right now. So our first letter is on page 9 of the report, and this is our independent auditor's report. So this is where we give our opinion on the financial statements, and that includes all of the government activities and the business type activities and the component units that are part of the county. So in our opinion, the financial statements that you have before you, they represent the financial position of the county at September 30th, 2023. If you look at the next page, page 10, some other things in here that we like to bring to your attention. There was a new accounting standard this year that really brings together the consistency in how certain adjustments to the financial statements are presented. And so the county went ahead and implemented this standard this year because there was some changes and corrections to the financial statements, and so they went ahead and adopted GASB Statement 100. Another change this year was a change in the reporting entity where the airport fund met the standard to be called a major fund. In the past, it has been a non-major fund, so that was a change in the financial statements this year, which I think Brandy's going to talk about in a little bit. And then there was a correction to the 2022 financial statements where the opioid transaction was not properly recorded in the prior year, so it caused a restatement in this year. And I think Brandy's going to talk about that in a little bit as well. This letter also goes on and just makes sure to clarify what management's responsibility is and what Ide Bailey's responsibility is for the financial statements. On page 11, we also like to point out that the financial statements have required supplementary information included, and this required supplementary information does not require us to give an opinion on it, and so we do not give an opinion. We do look at it, but we don't audit it, so there is no opinion on that required supplementary information. But also included is some supplementary information, and that information we do look at and audit in relationship to the financial statements, and so that information is materially stated in relationship to the financial statements. And so both those paragraphs will outline for you exactly which statements we're talking about and which ones we give an opinion on and which ones we do not. The other letter I want to go over is way at the end. So it's over on page 154, if you want to flip to that page. So we also do our audit in accordance with government auditing standards. And those standards require us to go in and look at your internal controls over financial reporting and your compliance with the laws and regulations that are applicable to your financial statements. And this is the letter that we issue at the end of our audit to tell you what we found as it relates to internal control and as it relates to compliance over financial reporting. So this year we did note a finding related to that opioid transaction. It was a very unique transaction, and there was definitely a lot of confusion across the country on the settlements and when they needed to be recognized and when the different units, so the litigating parties and the non-litigating parties and the state, when all of that became a revenue for the county. And in the midst of all that confusion, we determined that there should have been something recorded last year, and it did not get recorded. And so that is the internal control weakness that's been identified this year. We did not have any findings as it relates to compliance with laws and regulations. And then our last letter starts on page 156. And as part of our audit, we also audit the major programs over federal awards. And we issue this letter documenting for you our opinion on compliance with those federal programs and internal control over compliance. And so of the programs that we audited this year, we did not have any control findings or compliance findings this year. And this is where we would report it to you if we did have anything, but we did not have any findings. So those are the three letters that in those financial statements that belong to Ide Bailey. Does anybody have any questions on any of those letters?
Jody, could you tell them in relation to the error for opioid, what other counties have this same finding?
Yeah, I would say that governments across the country had this finding because all of this was, the first settlements were all happening right around the different year ends. So June, July, August of last year of 2023, a lot of this was happening. And so they got missed by pretty much most of the country last year. So we're finding in all of our offices across all the states. And every state did things differently as well, which adds to the confusion. So this finding is across the board. I don't know that we have found anyone that's done it correctly. So this is definitely not a unique to Kootenai County.
If you have no questions for her, I'll go through some financial items real quick. Did you have any questions on those audit letters?
The only question I have, and I'm just kind of trying to read between the tea leaves here, is that it sounds like this board should have nothing to worry about after this audit. Is that correct?
Correct.
That is correct.
Okay, thank you.
Okay, so Jody covered those auditor letters, and yes, related to the opioid error, like she said, that's a common finding. I know two other counties larger than us in the state of Idaho had the same finding, so as well as many counties in the state of Nevada. So that has to do with the year that the revenue gets recognized. At the time, we were treating it very similar to a grant. And the opioid agreements, I think you got signed like 2 weeks before the end of our fiscal year in FY22. And as part of the FY22 audit, it wasn't even identified. So it truly is something that's kind of a year and a half later, people are realizing, oh, it should have been treated with a different revenue recognition method. So it's been corrected, and next year we will, well, for FY24, we'll know the correct way to treat the additional settlements that are coming in. So I wanted to start on page 15 with management's discussion and analysis. Just briefly, a couple high points I wanted to touch on. So for FY23, the board had opted for a 3% property tax increase, new growth, and the URD closures to help fund ongoing operations. For once again, in FY23, the county has no outstanding bonded debt. The commissioners assigned fund balance policy for FY23 directed $19.6 million of funds to be saved as assigned for future facility and infrastructure projects and other uses. Over on the next page, page 16. So as of the fiscal year end 2023, the county had a combined governmental and business activities ending net position of $177.5 million. Of this amount, $41.7 million is unrestricted, which is available for spending on citizen services as well as keeping the county in a debt-free position. And I'm going to tie out a couple of those numbers on our financials here in a minute. The county's governmental activities total net position for 2023 is $115 million, which is up 12% from the prior year. Key drivers for that include an increase in our investment in capital assets of $9.7 million, or 15%, and an increase in restricted net position of $243,000, or 1%. Restricted net position increased primarily due to increases in fund balance in the airport and other non-major funds. Our solid waste enterprise fund gained over $4.1 million in net position, which is a 7% increase over the prior year. Historically, a range between 2 to 7% is considered normal. Key drivers for that include a $1.2 million decrease in landfill closure and post-closure expenses, as well as a decrease in depreciation and landfill depletion of $2.6 million. So in general, our financial statements, the county's basic financial statements contain 3 components: the countywide financial statements, the specific fund financial statements, and then the notes to the financial statements. On page 31, we have our statement of net position. So this would be the most comparable financial statement for a government agency if you were trying to compare it perhaps to a financial statement for a private organization. This would be most similar to what you would be used to be seeing. So it's a full accrual statement. We have a column for governmental activities, which is all of our county's funds, including our health insurance fund. And then the column for business type activities is our solid waste fund, because they're a business enterprise fund on their own. And then you can also see off to the right, we have our component units. So the North Idaho Fair and Rodeo, after we kind of did a deeper dive on some discussion with the fair and our legal team, and we decided to continue reporting them as a component unit. So you'll continue to see them reported separately next to KCMS. I will point out that this is the last year you will see the fair and rodeo with the fiscal year end in December. Starting in FY '24, they've agreed to change their fiscal year end to align with the county and with our other component units. So we'll have more continuity in our financials and in our budgets, which will be really nice. Down at the bottom, in the governmental activities column, under net position, you can see our net investment in capital assets is $74 million. So $74 million that we have in assets, buildings, vehicles, land, that type of thing. And then our unrestricted net position for governmental activities is $21.3 million. You could essentially consider that our emergency funds for FY '23. And then our ending net position for general government is $114 million. Going to the next page, page 32. Just a couple of numbers I wanted to point out. On page 32, in the expenses column, you can see total primary government expenses was $128 million for the year. That includes depreciation, because once again, this is a full accrual financial statement. Then over on the right, on page 33, under governmental activities column, you can see that negative $58 million. That's the net expense in revenue. So that is essentially the amount that we had to pull on taxes to fund our operations for FY '23. Then down below in that same column, you can see that top number, $61,749,000. That is all property taxes collected in FY '23. Now, it might be a little confusing because that's larger than our levy amount was. And the reason it's larger is because that includes any collections of property taxes that were late, that people paid late. So collections of prior year taxes, as well as any late fees on those, interest, special assessment taxes, things like that. I know that was quite a bit of detail, but do you guys have any questions on those financials that I just went through?
No, thank you.
Okay, on page 34 is our balance sheet. This is gonna be more like you would consider like checkbook accounting, like fund accounting. Couple things, so you'll see the airport fund is in its own column. Like Jody had mentioned, this is the first year the airport qualifies as to be its own major fund, and that's because of the new GASB pronouncement where we have to book deferred or unavailable lease inflows. And so because of all of the leases out at the airport, that entry that we do every year, they now qualify to be their own major fund. So you can see down under the deferred inflows of resources section, there's a line titled unavailable lease inflows. And in the airport column, that's $15.4 million. That represents all of the future revenues as of 9/30 that is due to the airport based on the leases they had in place at that time. So you can think of that 15 million, that's the potential revenue sitting out at the airport. It's a really, just a thing I like to keep in mind, that there's a lot of future money out there. That's what that represents. Up at the top in the general fund column, there's a line near the top called litigation settlement receivable for $1.9 million. That is the amount of opioid settlement receivable as of 9/30. That is the full 20-year amount that we're expecting to receive. So we had to recognize the entire amount of revenue and book this receivable, and we have additional opioid settlements that are being signed in FY '24. So this receivable will grow next year because there are multiple different lawsuits that get signed, and then the state signs the agreement, which means we have to recognize the revenue. So every time a new one comes on board and gets signed, we have to recognize that revenue. That's offset down below in the deferred inflows of resources as unavailable litigation settlement because we haven't received it yet. And then at the under the assets section at the top, that last line, restricted cash for $30 million in general fund, that is our ARPA cash as of year end. And then down at the bottom, under deferred inflows of resources, that first line, it says future year property taxes for $59 million. That is our FY '24 levy amount. So in FY '23, at the end of the fiscal year, we recognize the next year's levy amount as unavailable or future year property taxes. So that ties out to our L2, our levy amount for the next year. So did you have any questions on that? Okay.
No.
that's pretty much all that I had for you guys. Do you have any, one thing at the back of the financials on page 127, we have a whole statistical section. So on page 127, you can see there's a like 10-year trend data. So it's just kind of interesting. You can look at taxes. So you can see a 10-year history of taxes levied. You can also see right below that interest and investment earnings. So under governmental activities, interest and investment earnings, you can see the 10-year trend of our interest. And keep in mind, interest gets netted with market gain or loss every year. So like in 22, it was a negative. That's because we had a loss on our investments, which ate up the amount of interest earnings we had. So some of that stuff's just kind of interesting if you're ever bored and want to look at 10 years of financial data for the county. Other than that, that's just kind of some of the high points. I know it's probably more detailed than you wanted to hear, but this is a significant part of our job. So did you have any questions over the audit or anything that Jody covered?
No, thank you very much.
And then Keith handed out a letter. Jody, do you want to cover that, the governance?
Yes. Yes. So this letter is how we communicate with those charged with governance, which is you, the county commissioners. So in this letter, we do like to remind you that our responsibilities for these under generally accepted auditing standards and the government auditing standards that I mentioned, and our audit of your federal programs under the uniform guidance. So, and this is where we will let you know things that happened during the audit that we felt like we needed to bring to your attention. So if you look at page 2, at the very bottom, again, we just make you aware that there were a couple of new standards that were implemented this year. They didn't have a real significant impact this time around, but there were some new standards that were implemented. If you go to the next page 3, we like to point out that your financial statements do include some significant estimates. And as you know, estimates are subject to changes and swings, so we just want to make you aware that there are some estimates in your financial statements. At the bottom of that page, we talk about uncorrected and corrected misstatements. So corrected misstatements would be something that was discovered during the audit that management recorded to the financial statements. And then the uncorrected would be where management looked at it and said, yeah, it's not material to the financial statements, and so they chose not to record those entries. So if you go to the top of page 4, we just let you know the misstatements that happened, and this was the entry that was recorded for the opioid settlement that should have been recorded in fiscal year 2022. So that is that entry that we noted during the audit. If we had any disagreements with management, we would let you know that in this letter. We did not have any. And if there was consultations with other accountants during the year, we would let you know that as well, and that did not occur. Anyway, that's about it in this letter. Just wanted to point out a couple things that we like to communicate with the commissioners at the end of the audit. Any questions on that?
No questions, thank you.
If you could just make a motion to
And
accept.
that's all I had, Brandy.
Thank you, Jody.
Thank you.
If you could just make a motion to accept the FY23 audit, that would be great.
I move that we accept the FY23 external audit review.
Second.
Commissioner Matari,
Aye.
Chair Duncan.
Aye. All right.
Thank you.
Thank you. Okay, are we ready to go into executive session? He is here. I saw him walk in as I came down here, so let me see if I can just Yeah, you're waiting. Yeah. Just one.
Prosecutor, Civil Division, Pat Braden speaking.
Hi, Pat, we're ready for you to come downstairs, and you are on speakerphone on YouTube, just so you know.
Okay.
Thank you. Bye. All right, I would entertain a motion.
I move that we enter into executive session pursuant to Idaho Code 74-2061D.
Second.
Commissioner Matari,
Aye.
Chair Duncan.
Aye. All right. It's 2:28. Is there a motion?
I move that we exit executive session 1D with staff to proceed as discussed.
Second.
Commissioner Matari.
Aye.
Chair Duncan.
Aye. All right. Yes, you may, Pat. All right, public comment. Hearing none, didn't see anybody else in the hall. So, 2:28, meeting adjourned. Thank you.